Hey, how you doing? This is Adam Post, publisher of more than 1,000 comic books and marketing expert covering Disney. Disney stock collapsed today, and I've been talking about Disney stock for a while. One of the things I point out specifically is don't be so concerned about Disney as far as their stock price goes until you see their stock price go below its 52-week low. Because stocks go up, stocks go down. Today, the stock did go below its 52-week low on a steady decline. And the stock price today has now closed at its lowest point since 2014, almost a full 9 years ago. The other thing I said we should really watch out for with Disney is watch when their debt starts to get reported as lower and lower quality. I saw a little bit of that about a month ago. We did a video about it. I haven't seen more of that recently, but we're going to have to watch out for it. Companies do need their stock price to be at least relatively stable for them to do the business they need to do. Sometimes it's raising money. Sometimes it's issuing more stock. For example, when Disney acquired Fox, it was half cash and half stock. You know how much half stock was to acquire half of Fox? It was about $26 billion. Their whole market value now is around $150 billion. About a month ago, it seems like it was $160 billion. And it was. It's down severely. Today's drop was more than 3%. Let's get into the story. Before we do, please be sure you are subscribed to the channel. Click the bell for notifications. Give me a thumbs up. I really appreciate you. Okay, so Disney stock closes at lowest point in nearly 9 years. At the closing bell on Wall Street Thursday, the Disney Company recorded a drop of 3.91% for the day, closing at $82.47 per share, the lowest since 2014. On October 2014, the stock market closed with Disney shares at $81.74 per share, which it could easily reach again over the next week, over the next month. There really is no reason that Disney stock should go up. And more people are starting to discover this is a seriously troubled company. Here's an article from Investor Place talking about the 7 stocks to sell in August before they crash and burn. It only came out about a day ago. It's not like they were telling this to us a month ago, but they are putting it out there, and they're not the only one. This was before today's crash. Disney reported rather dismal second quarter results on August 10th as its top line rose just 3.9% year over year. Top line is gross revenue. Worse, it was $200 million below analysts' average estimate. Always a bad sign when the analyst whose entire job in life, entire career is to follow specific stocks and they can't pick the number because it's just lower than expected. It's a really bad sign. In addition, Disney also reported a loss per share of 25 cents as compared to its year earlier loss of 77 cents. For years, the author argued that Disney was being badly hurt by cord cutting. That reality appears to have finally penetrated the street's consensus as shares plunged 22% in the last year. Also, CNBC's Josh Brown says Disney is indeed being massively negatively impacted by cord cutting. In addition to cord cutting, the company is also being hurt by weakness of movie theater attendance and its public spat with Florida Governor Ron DeSantis. Disney has been trying to say that it's not a big deal that it's been fighting with the governor of Florida over what used to be the Reedy Creek District, essentially the private county they were allowed to operate to control costs and taxes and building and all the business they essentially needed to do in Florida around their theme parks. When Bob Chapek fought with the governor of Florida before Bob Iger came back, I was really passionate about it in my videos talking about Disney because that is something that is an incalculable loss to Disney. Whether the real value is a couple of billion or 5 billion or 10 billion, it's really not a number you can pick out and say, hey, this is how bad it is. It's much worse than that because with the loss of the control of being able to do whatever building they wanted, being able to kind of set their own rates for some of their taxing and expenses to operate, even just the premise that they need to go and get approvals for construction projects and expansions they want to do, put them in a very difficult situation compared to the situation they used to be in. Disney has said it's going to still commit billions of dollars to build in Florida. Why would they do that while they're battling with the governor? Well, very simple. Because with real estate development, if you control the land and you have very viable real estate developments you can do on that land, you can start to create value for the property, and you can create value for the holdings that you have almost immediately when you start to announce projects. The Disney people, of course, are very sophisticated at this. They have entire operations set up to do this. They can spend $10 billion on development, or say they're going to spend $10 billion on development, and create value well in excess of that $10 billion just by announcing the projects. Because look, they do have a multi-year history of operating successful theme parks in Florida, but not so smoothly anymore. That entire little setup of being able to develop real estate related to their theme park projects and create value out of nowhere, like when they take their intellectual properties, create what should be an easy win for a film, and then just add that to their film library and immediately be able to create value. They just can't do either of those things anymore. This was out just 2 days ago. I've been holding on to it for a video. I didn't really expect the stock to get this bad. When we talk about how bad the stock really is, if the stock is down, and they show it here, 3.91%. It doesn't really sound like a lot. But first of all, this is just for a day. Every point for a $150 billion company is around $1.5 billion gone. It doesn't mean the stock can't go back up. But what it does mean is, if you do the math of 1.5 times 3.91, you'll see a loss of value of over $5 billion in just a day. That's a lot of money. And there's no reason to think that their stock's going to all of a sudden start shooting back up. I'm not the only person who looks at these stocks and says, well, you know, if the stock goes below its 52-week low, that's the time to start getting concerned about the company. No, that's very typical. That's not something that's unique. I would expect the stock to continue to go down for quite some time because there's just no reason, there's no narrative for it to go back up. In this coverage from Barron's today, Disney on track for its lowest close since 2014, which it did hit. Walt Disney stock was falling Thursday in a head-scratching move as shares dropped for 3 of the past 4 days. Why is it head-scratching? You don't see one analyst say, you know what, this is probably a problem having the whole woke approach with all of our intellectual property. It's one scandal after another scandal. And this comes after the Snow White scandal, where everything everyone has seen on the project, all the visuals, look ridiculous, and it's obviously not honoring the original Snow White and the Seven Dwarfs film. So what does that say about Disney? Well, firstly, they're going to lose money on that movie. There's no way they can make a profit on it, especially because while no one really seems to like it, Disney has developed this reputation, which it's very well earned, that they spend way too much money to make their films. So if people don't like the film and they're going to be destroying their heritage by making this film, and it's going to cost too much money to make, and they've been losing money on almost all their major film releases, what does that say for the future of Disney? It's very normal for a business to have miscalculations, to have a bad week, to have a bad month, to have even a bad couple of years. That is not a problem. The problem is investors and creditors, people who have lent money to the company one way or another, want to understand what the strategy is to turn the business around and have it being successful again. Disney hasn't really been able to show any kind of plan where if people were to look at it would say, oh, you know what? That looks pretty good. I did a video just recently about Disney selling its ESPN unit. There's one analyst, Dan Ives, who's very experienced as an analyst, knows both companies very well, and he makes a great argument for why Apple, with all the money it has, really could do a great job by buying ESPN. They could invest in it forever, and they could also pay an astronomically high price to Disney and really help them out. Something like that. Okay, that'd be something to look forward to for Disney, but all of Disney's cable channels are really heavily dependent on ESPN. Once Disney sells ESPN, which also is kind of tied in with the sports rights with ABC, it greatly affects ABC and the other cable channels. Those channels were bringing in tons and tons and tons of revenue for Disney. They're a really important part of their business. While the Apple deal might happen, it might not happen. It's not being openly talked about. It's not like it's a company strategy. The only company strategy we've heard from Bob Iger has been, well, we're going to improve our quality by cutting back our costs of production and by releasing less films. Well, that doesn't really actually make any sense. Just because you're making less films, it doesn't automatically make them better, especially not with the woke themes and the violation of what people expect from the brands they own and control. And you can even see it with Elemental from Pixar. Elemental's international box office, the Pixar film, has now caught up to the new animated Spider-Man film, a very big success. Domestically, it's not doing as well as Spider-Man. However, it just shows that domestically, Disney is doing terrible in the United States compared to what it should be doing overall in the United States. This is Disney's home country, but they're not honoring what the country expects from Disney. And they've gone way too far into trying to please the progressive left with updated versions of classics that if they hadn't have done that, it would have been the same kind of thing as Bud Light. They would not have needed to do that to keep both sides of the audience. They never should have made a choice like that. This is a really bad day for Disney, and it will be fascinating to see what they try to do to turn the narrative around. Because, as I've been seeing it, there's kind of a 50-50 split with analysts that say, look, we don't really trust what's going on with Disney, and others that just keep saying, well, hey, it's Disney, so of course they're going to turn things around. However, as results continue to be bad, there will be more and more people skeptical about Disney, and if Bob Iger isn't able to announce something big very soon, the stock price is just going to continue to fall. Let me know what you think of all this in the comments below. Do you think this is the beginning of the end for Disney, or do you think they may be able to turn things around? Let me know what you think. Always love to see your ideas. Please be sure you are subscribed to the channel. Click the bell for notifications, give me a thumbs up, and I'll see you again soon with another video. And if I don't see you, I will miss you.